I'm 680 News senior business editor Mike Eppel. We saw lots of volatility and price swings on the cannabis companies on the Toronto stock market today, a reaction to the Ontario government's rollout of rules and regulations regarding retail cannabis sales. Now, the stocks were down for the most part on some concern that the pot producers themselves will be limited in the number of licensed retail locations they'll be operating directly. Now, again, the big concern or unknown at this point is exactly what their sales results will be. So we've seen this time and again for the cannabis companies. Big price swings, heavy trading volumes. Today, however, they were down on average 2 to about 6%. Now, one of the big tobacco companies, Philip Morris, says it is not interested in getting into the cannabis market space. There's been some speculation Big Tobacco might be looking to branch out or diversify into cannabis, but again, Philip Morris reiterating what it had previously said, saying it's going to stick to what it currently knows best and trying to diversify in other ways. Now, the big beverage companies have so far been the only ones to invest in cannabis, specifically for cannabis-infused drinks, but those won't really be on the market for probably another year's time. Well, if we can't get the oil to the markets by pipelines, we'll send it by rail. That seems to be the attitude of Canada's energy producers. Big contract signed today from Alberta-based Cenovus Energy, 3-year deal to see more oil shipped by rail from CP Rail and CN. This follows all of the pipeline issues related to the expansion of the Trans Mountain Pipeline and the Keystone XL. Oil by rail shipments in Western Canada specifically have already hit record levels so far this year, and the result is CP Rail stock today on the TSX at an all-time record high. How much is Apple making from the sales of its newest iPhones? Tech Insights took apart one of the largest and most expensive iPhones, the XS Max with 256 gigs. We figured out that the parts and the manufacturing costs about $450 US. Apple is selling those at more than $1,200 US and around $2,000 here in Canada. Price profit margin north of $800 per phone. That results, JP Morgan today raised its price target on Apple stock to a record $272 per share. And Google, celebrating a birthday. It's no longer a teenager, turned 20. Formed originally in 1996 by Larry Page and Sergey Brin at their basically their parents' garage working out of Stanford University. It was founded officially in 1998. Went public in 2004, missed the dot-com bubble, debuted at $85 per share. It has never traded below that price. Today, it sells for more than $1,200 per share on the Wall Street markets. The company's worth an estimated $500 billion. From the 680 newsroom, I'm Mike Eppel for City News.